Hello, fellow traders. 'Tis I, the Rumpled One. It is Friday, March the 9th, the year 2018. Let's talk trading. We'll do the weekly wrap up, of course, but it's NFP Day. Now, NFP Day is one of those days where they say, oh, you better step aside, you better not trade. Ooh, it's volatile. Ooh, scary. It's like, yes. It is a little more volatile. Yes, price moves like crazy sometimes. But that can be very profitable. It really can be. And the thing is, you don't really need any different rules or anything because price is either going to go up or down. So it's going to cross lines just like it always does. So there's really nothing to fear on NFP Day. Especially if you have your money and risk management in place. You guys know every day you get to see this screen. Hopefully it's burned into your brains by now if you've been watching, this latest series of videos that I've been putting out. So let's look at the weekly. Now yesterday, wasn't it up here? Look where it is now. We've got 53 pips below that weekly open. So had you taken that one simple trade, weekly open cross, you'd be up over 50 pips. You see, this stuff is so simple. I don't know what else to tell you guys, you traders out there. Now, I know there was one trader who was saying something about, well, when do you take profit? And if you take profit at 2 or 3 and then you have a 10 pip loss, all of that. Well, you see, that goes back to money and risk management. Think about it. If you've taken 2 trades, say a 2 pipper and a 3 pipper, you're up 5 pips. You get into a trade. Now, it starts to go against you and you've got a 10 pip stop. Do you let it run the whole way to 10? I mean, think about it. Why don't you stop out at 5 and just scratch and go, okay, I'm back to where I started, but no harm done, right? Other than just a few trades. I mean, I have a one rule of thumb that I wish I would employ more often than not, which is if a trade doesn't go my way after the first 3 minutes, I should just scratch it. It's just my timing was off. I guessed the wrong direction. Because that's going to happen sometimes. Because usually if I'm not in the green within the first 3 minutes, then chances are I'm not going to be in the green for maybe the next 3 hours. It just seems like I've read the chart wrong or incorrectly or inaccurately, and price is going one way opposite of the way I thought price would go. So that's why I try to keep it simple. I mean, if you take one of these horizontal line crosses, I mean, say you come down here and price was up here, boom, it hits that open, and then it starts going the other way. Well, how far does it have to go before you say bail? I mean, because what'll happen is, say it goes against you 5 pips and you've got a 10 pip stop. You're going, okay, now you start, then it's down, you're down 7 pips. Now you start to hope. Then you're down 10 pips. And if you didn't have a hard stop, then you're thinking, oh, it's going to come back. And then next thing you know, you're down 15, you're down 20. I mean, you guys know that's what happens, but there's that part of the brain that just hates to lose, just hates to be wrong. And so you wind up, getting sucked in as opposed to just scratching that trade, anywhere between, -1 and -10 and say, okay, that one's not working out. Maybe I'll do better the next time. You could always say, well, I thought it was going this way. Now it's going the other way. How about I just stop and reverse? I mean, that works. So just keep that in mind. Okay. So for those of you who want to get down and do the old RR risk reward and go, yeah, well, if you take these little teeny, 2 or 3 pip trades and then you get a -10, it wipes you out. Now you got to make up. And, well, you see, you don't have to go the full -10. Use some common sense. If you're reading the chart, and right now, if you're long and this sucker keeps making new lows, Obviously, you should either A, stop out, B, go the other, get short, or C, all of the above. Okay? Don't do D, well, let's just hope it goes back the other way, because it's obviously, that could be a long time. And the other thing is when you stop out, so let's say you were long and you just stopped out right, say you stopped out somewhere here and price goes here. Well, you can always re-enter that trade and back at that level. Just think about, if you were on the 10th floor and you wanted to go down to the first floor and you got on the elevator, next thing you know, you're on the 11th floor. Do you take it all the way up to the 110th floor, or do you get off and wait for an elevator to come back down your way? I mean, it's up to you if you want to take that ride or not. Okay, once again, simple horizontal line trades. Here's yesterday's low, and see what happened when price hit yesterday's low. Once again, it's simple. Daily open, we're 77 pips below that daily open. And we look at the ranges. We've had some nice movement here on NFP day on some of these pairs. Buy zone, okay, in. Maybe you stopped out, maybe you rode it back and hit here. Open, it didn't make a new high, you scratched the trade. Here maybe you pop back in, it's coming back, maybe you scratch the trade. Here maybe you try it again, and this time you're probably going to take a stop or just scratch it real quick. Here you're going to make money. Here once again you could make money. Now this would have been a tough one. Okay, well, let's see, this is 9 o'clock my time. That means that's 12. So let's go back. 12, 11, 10, 9, 8. Yeah, so you see here, this is the NFP candle right here. So it might have been tough going short with a green H1 candle, but here at that weekly open, you see it would have paid off. It gave you a second chance here too. Even though it would be hard going short with the green H1. But you got a red daily and you'd have a red weekly. So you'd have that in your favor. Once again, that's up to the trader. And as you can see here, rat zone, there really wasn't a rat zone here. Put in here, came out, put in, came out. So the green rats got to get some cheese today off the dollar Canadian. Pivot point, open, pivot point. And see, it hit there within the first 4 hours. Let's see, how long did it take? Pivot, yeah, right there. Open, yeah, within the first 4 hours. So you can see that happened between the Australian and Asian session. But simple, fading the pivot, paid off again. So, if you're looking for a method, fading the pivot is one that usually pays off well. Price action, what's there to be said that I haven't already said? I mean, really, if you just got to the party right here, it's right at the line, you'd be up, what, 4 or 5 pips right now? It's really not that difficult. It really isn't. Just try to keep it simple. Yeah, I might present, 4 or 5 different methods here. A couple different ways to enter a trade, but just pick one. And you see, in fact, I was thinking about talking about this next week, but I might just spill the beans. And, what you have to do is you have to pick a method. And the thing is, you're probably looking for some kind of guarantee, and there isn't any, especially in trading. And so you're hesitant, you're afraid to pull the trigger because you don't know if it's going to work. Well, hey, let me clue you in on a little trading secret. For any particular trade, you never, ever will know if it's going to work. because you wouldn't bet your life on one trade. If you guess wrong, you die. You're not going to do that. So you have to understand that any one particular trade, you don't know the outcome. So what you have to do is you have to give yourself a limit. And think of it as an experiment. You say, I'm going to try this method. I'm going to try it faithfully, and I'm going to do 100 trades. Okay. Now, if you just trade for a dime a pip, 10 pip stop is $1. So what you're saying is, I'm going to put up $100 to test this method. And at the end of 100 trades, I'm going to see what my account size is. Is it more than 100 or less? You're going to keep everything the same parameters. But the thing is, and this is what the tough part, you have to follow the method exactly. Any trade that didn't follow the method, you can't count that trade. So if you rushed a trade, if you airballed an entry, if you were late entering, none of those trades count. You have to execute those trades flawlessly. So then when you look at 100 flawlessly executed trades, you can evaluate whether or not the method works for you. Because maybe you might get into it and it's like it might take you 1,000 trades to have 100 flawless executions. Maybe that method just doesn't work for you, where another method, right off the bat, you're starting out with 99% flawlessly executed trades. Now, once again, we've got yesterday's or previous session's 5 lines: high, mid, open, close, low. We've got the H1. We're just going to go with the H1 candle color at the line. And as you can see, sometimes it paid off handsomely, sometimes it didn't. So, and on this, sometimes you might want to pick a bias. So, if the day and week are up, you might only want to trade long at the lines. Just something to throw out there. So, for example, I believe right here, price was above the weekly open. Okay. I believe it was above the daily open, or right around the daily open. So you might say, I don't know, it's having some problems here. Lower lows. You got our lower highs. You see here, it looked like it wanted to go up. But once again, this is the NFP candle. The wick zone, price doesn't like to stay in the wick zone. Popped out a little there. That was probably, once again, that's the NFP candle. But you can see here, price didn't want to stay in the wick zone. Highest open, lowest open. You can see here what happened. You had the highest open. Price just came down here. Now we've got a lowest open. Not much time left. It's Friday. Guys are bailing out early. But it looks like it's trying to pop out. And it just might. Once again, the tick chart. I think I'm going to have to, I might get into this a little bit more. And I thought I might be able to put something on the tick chart to show you guys how this really works. You see here, price got above that valley. And so we're trading long. I'm thinking maybe what I should do is maybe put some history or something along the bottom, but that's not, I don't think that's going to work because, but I'll see if I can figure out something. So you can see what's going on. You can see here that the ask dipped right below the high bid, the peak, but now it's going back the other way. Simple, the candle color. One thing I mentioned about using the candle color multimeter, and you can see here, H1, D, these are all red, but we do have some movement on reversals.